With that, I'm going to pass this over to what I would like to say is a good friend of mine now. He is probably the best interviewer in the business. He definitely knows crypto, and that would be Jon Najarian.
Great to be here. Thank you, Andrew. Thank you for that. Thank you very much. Thank you. Beautiful. Thank you. And just as Andrew said, many of the firms that are moving and considering Austin because of that great South by Southwest conference, consider it, of course, because I believe they have to pay almost double the salaries to keep people in the Bay Area because of the cost of living in Silicon Valley, Northern California, and so forth, and the horrible commute times. So it's not surprising that Louisville is actually listening to Andrew and considering how they could make a bigger impact with some technology here. I'm going to give you guys a little bit of stock versus cryptos because, of course, for, I guess, 37 years this fall, I will have been a trader. I came out of playing football for the Chicago Bears. When my career was over with the Bears, they gave me an opportunity to, my agent gave me an opportunity to go down to the trading floor. And I've been there ever since. Love it, love trading, although I'm not on the floor anymore. All of you who invest, I invest the same way you do. If you're handling your investments yourself, you're probably doing online trading. That's what I do. And for the past year, I've really been getting deeply involved in crypto. Blockchain technology, yes, but crypto and helping companies launch, because my partner, who will be up on stage with me in 20 minutes, Andreea Porcelli, she and I have been going around the country and around the world, just got back from Moscow 2 weeks ago, bringing companies that are doing these token generation events. We call them TGEs, or token generation events, instead of ICO, because ICOs, or initial coin offerings, were getting a bad rap. There's an awful lot of very exciting, cool companies that are coming out right now. And I say that with no trepidation at all. These are companies, this is the cream that is coming out right now as far as companies that are using tokens. They're properly doing tokenization. They're using it so that they can compete in an environment where you don't really have the venture capitalists at their level, and they don't have to give up, such a majority of their company to private equity and VCs and things like that. But we'll talk about that in 20 minutes or so. I was going to give you guys a little bit of background, not just on me and trading, but on the stock market versus these new investment vehicles. And one of the jokes that I've seen recently was something like a kid in college says to his professor, can you believe it? It's up 1,500%. And the professor says, nothing that has any real value can possibly be up 1,500%. And he said, I was talking about my tuition. So obviously we focus on some of the big successes of Bitcoin, of Ethereum, of Ripple, of any of these cryptocurrencies, and they're fantastic. But there's a lot that goes into getting, there are now 1,600 of them. You'll see a slide in just a little bit. There's 1,600 cryptocurrencies out there already. And so I'm sure many of you are saying, well, why do we need one more? Well, you probably don't. But these are the investment vehicle, and then what Andreea and I do is we help get them funded by going on the road to Monaco, where we'll go in 2 weeks, or Moscow, or London, or Geneva, or Zurich, or wherever. A lot more buyers overseas right now than there are in the United States. That'll be changing, and the SEC is going to be part of that, really. Some people that we're working with right now, T0, perhaps you've heard of Patrick Byrne and T0. More or less, T0 is, that name comes from, if you trade stock, you know that when you buy Apple today, it takes 3 days to settle, T plus 3. Well, T0 with blockchain, you can basically, one of the reasons that stocks do it that way is that it used to be 5-day settlement and so forth. Now they've narrowed it to 3, and soon it, according to Patrick Byrne, will be 0. Because with blockchain, you can make sure that the person really has what they say they have when they hand you a certificate. Because many times, and most of us don't, of course, hand out stock certificates anymore, but you'd be surprised when I ran a big firm called Trade Monster, you'd be surprised how many times people would come to us with forged stock certificates, stolen, or they were allegedly destroyed in a fire, and they're coming to us and basically trying to commit a fraud and cash in this stock certificate. With blockchain, you know it's real right away. When Andrea and my friend Andrew Coffey and I, when we were in Zurich this past December, a Russian came up to me. I won't do my bad Russian accent, but he came up to me and said, yeah, this is all great, but how do I trade out if I have a big trade? And I say, how big? And he said, 50 million. So I said, no problem. And he said, what do you mean, no problem? He said, I look at these markets. He said, if I put 50 million in there, I'll drive Bitcoin down. It was 10,800 at the time. He said, I'll drive Bitcoin to 9,000. And I said, no, you won't. But you really can't put it into one of these. You can't put it into Coinbase or Genesis or Kraken or any of those exchanges. You don't want to do that if you're trading that big. I said, but I'll get you a bid. He said, where? And I handed him my cell phone. I dialed up my friend in Chicago who runs a very large crypto trading desk. And he said, how much has he got? I said, 50 million. He said, put him on. So I put him on the phone. Immediately, within a minute, he knows that guy really has what he says he has. It's real, and he could prove it because of blockchain. He could look at it and say, okay, numbers match up. I'll make you a bid right now. 10-2 bid for 50 million. I'll sell you at 11-3, 50 million. What do you want to do? So that is coming. What's also going to be coming is, of course, not having to deal with wallets, hot wallets, cold storage, and all the rest. There are two places you can really avoid that already, the CBOE and the Chicago Mercantile Exchange, because they trade futures on Bitcoin. I'm not saying it's a perfect contract. The CBOEs is one contract, one coin contract. The CMEs is a 5-coin contract. But those are popular already. They've been setting records ever since they launched. And you don't need any special wallet. Literally, you trade it through your Schwab account, TD Ameritrade, Fidelity, whatever. So something like that is coming for crypto that'll make it a lot easier to where you don't have to worry about, like one of my daughter's friends, he had 100 Bitcoins on his iPhone 2 years ago. He got smashed at Lollapalooza and lost all of them because he didn't write it down, didn't have it, so he doesn't know what his passwords were or anything else. 100 Bitcoins at today's market, $900,000. When he bought them, he would have been one of those big success stories because here's a 17-year-old kid, at Lollapalooza with his iPhone, doesn't really think about that he hasn't written down this information anywhere and loses it all on basically a $2,500 investment that he took to what would be now, nearly $1 million. But anyway, that is going to be changing. But those are the horror stories that you guys hear and that I hear that, make people scared about trading in Bitcoins and things like that. So with that, I'm going to talk a little bit about stocks and maybe some of the differences and similarities between stocks and crypto. So the biggest one-day drop in the market was 22%. Now, we've seen some pretty big drops out of Bitcoin. I bet not too many of you in the room can think of a time when we saw a 22% one-day drop in Bitcoin. And yet they'll tell me that can't be an asset, just like that joke about the professor, can't be an asset if it drops 22% in a day. That's the US stock market. Biggest, most liquid in the world, dropped 22% in a single day. This year, February, I think it was 5th or something like that. It probably should be burned into my head because I was live on air and the market was down like 300 or 400 points. And that big drop you see just above the decimal point on 950.39, that big drop occurred in about 4.5 minutes. It went from down 350 points, the Dow did, to down 950, and it flashed down 1,600 points in a heartbeat. It was literally less than 25 seconds that it was down there and then came back. 1,600 points, and that is the Dow Jones Industrials. 30 of the biggest stocks that we all trade, that we all know, everything from Apple to Boeing to IBM, and it dropped 1,600 points. Now, I'll grant you, percentage terms, it's not 22%, but it was pretty damn ugly. And so again, when you're talking about volatility or how much does an asset swing back and forth, you've got to be aware of things like that. As you can see, for instance, on that screen, a 950-point drop was only 3.7%. It went down another 700, but it wasn't a 22% drop. You can imagine what that would do to people's psyches right now if they saw something like that. But I don't think we're going to see things like that, but I point it out because, again, people that tell me, well, cryptocurrencies can't be real because they move up and down, and I've got an example coming up of somebody who said just that, and he happened to have a Nobel Prize. This lady doesn't have a Nobel Prize, but brilliant woman, Christine Lagarde, she said, not so long ago, some experts argued that personal computers would never be adopted and that tablets would only be used as expensive coffee trays. By the way, Apple, I think, set a record yesterday for their expensive coffee trays. I think it would not be wise to dismiss virtual currencies. I agree. And so, of course, I have not. Instead, I've embraced them. Here was that Nobel laureate that I was talking about, bubble, bubble, fraud, and trouble. Now, he doesn't really cite fraud in the article as much as he's saying the whole concept is a fraud. Paul Krugman is saying that. And I don't agree with almost anything Mr. Krugman says, but in particular, I took offense at this because more or less, as Bitcoin was dropping in February, this is an article from, what was that date again? January 29th. So just a couple days later, I was at a big money show in Orlando talking about cryptos and cited this because, he says, oh, it's lost 40% of its value over 6 weeks. This can't be an asset class. If it were an actual currency, that would be the equivalent of roughly 8,000% annual inflation rate. Okay, and there are currencies in the world right now that do have much higher inflation rates than that. But anyway, a matter of fact, if you were living in Argentina right now, your entire pension for the average person in Argentina would buy you a cup of coffee. And I'm not kidding. That is how bad inflation is in Argentina. I'm sorry, not Argentina, I apologize. Venezuela, my mistake. But anyway, I think Krugman's off a little bit on this one. And I think when Bitcoin was bouncing around, many of you know that traders like me tend to use at least a little bit of charts. We also make fun of them. We say that every ship at the bottom of the sea was loaded with charts. So if they work so well, why is the ship at the bottom of the sea? Simple truth is, though, that if the captain read the charts, he wouldn't have hit the reef and probably wouldn't have sank the ship in most cases. But Bitcoin, taking a smoothed average, a 1-year average, let's say 256 trading days in a year, if you took that, the moving average, the 256-day moving average was roughly between 7,700 and 8,000. Bitcoin has smashed down to that level and bounced several times now, briefly passing through that level, but then getting right back above virtually the next day or 48 hours later. The last time I bought Bitcoin, I bought it at 6,400, and I still hold it right now, but I own a lot more Ethereum and Ripple because we were just in Moscow and they love Ripple. They love Ethereum too. But one of the Russians there was telling me I had to own a substantial stake, he put it, in Ripple because it's going to go up 30%. So I'm always a guy to trade a hot tip. So, but it is up about 15% since he told me that. Here's the price of Bitcoin. I probably should have picked a different color for the graph, but as you guys can see, in December, it peaked at almost 20,000, depending, because there are 500 exchanges out there, depending which one you were reading at that time, you may have seen a 20,000 print. But there it is, bleeding off into that February when basically Mr. Krugman made his call right there, pretty damn close to the bottom, when he put out his thing about fraud and trouble. There you see it rebounding to 11,000, and there's a couple bottoms there right around and just through that moving average I talked about. So that's where Bitcoin has been over the past year. Here's a little something about what Andreea and I do, and after my presentation, she'll come on up. I'll introduce her, and we'll talk about what we do as far as these token generation events or initial coin offerings. But last year, there were 435 successful initial coin offerings. They raised an average of $12.7 million in each one of these coin offerings. The 10 largest, though, raised 25% of that money, so as you might imagine, the average of 12.7, a lot of them were well under that. A few of the really big ones, like Patrick Byrne with T0, I believe he raised $250 million so far in his ICO. And that'll be, he's fully compliant, by the way, with the SEC guidelines in the United States, which are basically that a token sale, coin offering, whatever, is a security. They're viewing it as a security, so you have to paper it up the same way. So people that always want to tell you, well, this is really a utility coin, John. I don't have to have this thing papered up. You better have another country's passport in your pocket and some ability to get on a private jet quick, because chances are the IRS or somebody from the SEC is going to take a different opinion of whether or not that utility coin really can be sold to any American. And if it changes hands with a single American, they're going to want that thing to be papered up properly. So anyway, those are just some of the things you need to watch out for if you're somebody who's either buying a token that happens to not really be fully compliant. You might have some trouble. Now, they could be domiciled anywhere on Earth. They could be Gibraltar, they could be Lugano, Switzerland, they could be Isle of Man, Cayman Islands, all kinds of places for where they're domiciled. But the SEC is going to take a really dim view of anybody in this room that is trying to tell some other person, no matter how many times you say, you can lose all your money if you buy my tokens. No matter how many times you say that, if it's not papered up correctly between Know Your Customer or KYC and the anti-money laundering, they're going to shut you down. Or you risk losing your money, having your money tied up in litigation if you're in somebody who's not doing it the right way. No slump in the ICO market, as you can see here. Startups are raising a ton of money. January of this year, look at that, nearly $500 million just in January was raised. And you see how much money has been raised from basically June of last year, when Andreea and I started getting more involved in it, September, October, November, December, and so forth. Over $2 billion is right now in 100 dedicated crypto funds. That number is wrong. It's much more than 100, but this was the latest data I could get. As you can see, that ramp, obviously 2017, a lot of people were filing for basically hedge funds so that they could run money in this space because of the crazy returns you can post up. And here's another one, a more recent one, talking about somewhere around 226 just through the 1st of January, 226 hedge funds are going to be really focused on cryptocurrencies, not just Bitcoin. A lot of them are focused on ICOs, or the token generation. And you guys know why, but if you don't, I'm going to tell you why. When you're buying a token and they're doing it in the private sale, they'll call it, or pre-sale, they'll generally give you a bonus. So for instance, if somebody's raising $10 million, they're probably selling 100 million coins at about 10 cents a piece. So that's $10 million. They're going to go out and they're going to tell in their pre-sale, they're going to say to the people that are buying, I'll give you a 50% bonus. It's usually 30 to 50%. I'm going to give you a 50% bonus for buying my tokens right here. And so somebody that, for instance, gives them $100,000 is going to get $150,000 worth of that token. As soon as the thing trades, they're going to smash out some or all of that. This is the person that buys the tokens is going to do that to recover their money and maybe play with the house's money on the other $50,000. That's what happens almost universally with these token sales. So you see that big spike when it's minted, when the coin starts trading, And then the person's playing with the house's money. I bet 100,000, 4 months ago when this thing was in the pre-sale. Now that it's minted and trading, I'm out, but I have 50,000 coins, and maybe those coins are 12 cents or 15 cents, or maybe they're 1, depending where they are after that person smashes out what they've bought. But a lot of funds are doing that, going to those token generation events, buying them on and getting that bonus, and then basically they can put up sick numbers for returns. I have 3 young traders that trade for me in crypto, and last year they were up just under 900%. So when you see numbers like that, and I'm not selling anything to you, you can't invest with them even if you wanted to, but when you see numbers like that, that kind of gets the both, fear and greed drive markets, and it might trigger that greed response when you hear 900%. They only manage about 1.2 million, but they did phenomenal last year. And despite the ups and downs of the market this year, they're up 100% right now, this year. This is the CBOE's volatility index. Volatility is how much an asset swings up and down on a minute-by-minute basis, on a daily basis, on a weekly, on an annual basis. So this is for the S&P 500. I shot this from this morning. It was a reading of 15.19, as you can see. And on the far right side of the screen, you see that 1549 roughly was where the price of the VIX was. Last year was unusually low volatility because the market began the year 2017 at the lowest point of the year, and it finished at almost the high of the year. It was just a steady climb all year long with no corrections, which is why there was almost no volatility. The volatility readings were under 10 for most of the year, meaning a 16 volatility, by the way, folks, means you expect about a 1% move. And the reason for that is it's a mathematical thing, but you take the square root of 256, happens to be 16, that's a 1% move. So if I see a VIX of 16, it's telling me that the world is expecting about a 1% move out of the S&P. When the market melted down in February, and on that day when we fell 1,600 points, the VIX spiked up to, I believe, 45. Even at 45, though, it's only basically saying a 3% move, and as you saw from that slide, when we were down 950 points, it's 3.7%. Volatility can be a pretty accurate predictor of movements in the market, and basically panic. When people are scared and they're running, volatility reflects that. So there was one of the headlines from that February drop, stock plunge erases 2018 gains. Dow Industrials fall 1,100 points, and the biggest point drop ever, again, point drop, 4%, and overseas indexes sink. So if you would have measured how much the Dow and how much the S&P moved that day, it would have a volatility not of 16, not of 45, but from top to bottom that day, you'd have had a volume of about 246. I mean, sick. And because I need to get Andrea up here, I'm just going to show you, Bitcoin has an average, this is a place where they chart volatility for Bitcoin. 60-day average is 5%. So a 4% average is 64, because 16, 16, 16, 16 would be 64. So it's about an 80 volatility is where Bitcoin is. Obviously much more than the S&P 500, but not as much as the Dow moved this year. Not as much as the S&P moved this year. So with this said, I'm going to bring Andrea up, and we're going to talk a little bit about CoinBoost. You guys, this is Andreea Porcelli. For 20 some odd years, she's been dealing in small cap stocks, traveling around the world. We met on a flight. She was flying back home to Las Vegas. I was going out there for an investment conference, believe it or not. It's always funny to say investment conference in Vegas. Yeah, but we've been doing business ever since that flight, really. And we've probably both, I'd say in the last 6 months, we've probably put on, I don't know, 200,000 or 300,000 miles traveling around the world.
You're
but
absolutely right.
I'll let you tell them a little bit more background about yourself.
I'm Andreea Porcelli. I am the CEO of Swiss Growth Forum, which was previously called Monaco Growth Forums. That company was acquired last December. And together with Jon, I am also heading CoinBoost, which is our venture essentially trying to promote a 360-degree solution for token generation events and for blockchain companies. People will ask me sometimes, what is the greatest challenge in either promoting a blockchain company or investing in a blockchain company? And I think the greatest challenge is really that there are no structures for that promotion currently. So whereas in the small cap world and in the growth equity world that I worked in for 20 years, you had, of course, investment banks, PR firms, media, et cetera. You really don't have any of that in the crypto world. And that's not taking anything away from the companies. It's just that they have to be much more resourceful, and they sometimes have to trust promotional means that are not necessarily the most ideal. So what we're trying to do is raise awareness around how these companies should be promoting themselves, particularly now that Google and Facebook ads have been essentially banned for token generation events.
Right. So imagine, folks, that you're out there, you've come up with this great idea. Again, we've seen a bunch of them lately. Like just last week, she was on the road with Priatech, fabulous company. They basically can increase mall traffic almost magically. They have licensed technology as well as videos from Wheel of Fortune and let me see, Jeopardy. That's Sony and CBS that own those two properties. They've licensed that, put it on in a kiosk in a mall, and let people play games where you see the Best Buy store and it says, Jeopardy by Best Buy. If they press that and play that game, if they win a big discount in the Best Buy. And that token that they win is only good for so many hours. So it brings that, in other words, if you had a 30% discount coupon for Best Buy that you just won by beating Wheel of Fortune or something, you're going to go into that store and spend it because tomorrow that coin is worthless, that token is worthless to you. So they have already hundreds of these machines out, and they've tested this in smaller malls, Victoria's Secret, Best Buy, and all those sorts of things. And they've done tremendously on the boosting of traffic, of foot traffic into the stores in those malls using this kind of technology. He used to work with EA Sports and Tiger Woods with the Tiger Woods games and things like that. And now he's come up with this. But when those guys are doing that, how do you get that token? Well, first of all, how do you sell the tokens in the first place? You need to get in front of a crowd that'll buy them. And then how do you keep the awareness of those tokens up so that the coins actually trade, so the investors that believed in you get rewarded? Because you want that coin to go from 10 cents to 12 cents to 25 cents to $1, and basically do what we saw Ripple do and Ethereum and things like that. And Ethereum had Putin behind it, so that didn't hurt them. As soon as Putin mentioned it, that was $300 million to those guys. And to him. I'm sure Mr. Putin did very well on the trade. And Vitalik Buterin did pretty well too. But that's the founder of Ethereum. But I think what Andrea correctly cited is that these companies need the ability to continue to do investor relations for these tokens so that people are aware of them, so that when the tokens trade, they don't just trade for that one day on that flip that I talked about. Instead, they can build momentum.
Absolutely. And of course, part of what we do as well is provide media coverage to these companies. We currently do that through the International ICO channel. We interview CEOs at the NASDAQ market site. Mm-hmm. They're all blockchain CEOs. We like to
We interviewed Andrew Prell there.
That's right. That's how we met Andrew.
Months and months ago, and then saw him again at the Miami event.
Absolutely. So the interesting thing is, you know, NASDAQ is now sort of about 6 months into us doing interviews there. Their CEO recently gave an interview saying that they were evaluating blockchain and how to incorporate it into the NASDAQ in terms of trading. So maybe they're not aware that we're already there. But it certainly helps. Particularly when companies are promoting themselves abroad and they're able to show interviews, you know, at some place that's so well known as the NASDAQ, it gives them that credibility because obviously most of these companies are not going to land in the Wall Street Journal, at least not now.
Right.
That time is probably coming.
And it's tough for them to get, you know, into the newspapers, periodicals, whatever it might be. And it's not probably the best promotion that they're ever going to get, just appearing in somebody's YouTube channel. When we shoot them at the NASDAQ, we're shooting them, you know, with the full NASDAQ background, HD cameras, proper sound. Our guy Andrew Coffey edits up the videos, inserts their, you know, links to their website or their white paper or whatever, that gives people an idea of where they can discover more about these, rather than just having some kid in his basement with a camera, with a webcam, shooting it. And I think that is why we've been able to raise significant profiles and money for these firms. In fact, should I put up that second PowerPoint, guys, so I could show them some of the things that CoinBoost does? Whoops, the second one if I could. By the way, there you saw the 500 exchanges. And there you see 1,600 cryptocurrencies, by the way. Coin market cap right now is $424 billion. As you know, it got up to, I believe, about $900 billion before pulling back. And I'm sticking with my prediction that we could be looking at $1 trillion market by year end for cryptos. And there'll probably be 1,800 of them by year end. If we could put up that CoinBoost one, my friend. Thank you, John. Yeah, he has. Luckily. I like your logo, by the way, Andrew. Like it. All right. And if you want to flip through any of these, I'll talk along with you.
So, you know, we've covered some of these things, but we just want to sort of recap. You know, we're also launching a coin. The coin is essentially an alliance of service providers in the financial, PR, and media space that service token generation events. And some of the challenges we talked about is essentially that investors really have no way of knowing which coins are going to be successful because there's no transparency. You don't know who else is investing in it, you don't know how they're promoting themselves, and that makes it really a shot in the dark. So if we're going to achieve institutional ownership, fund ownership of cryptocurrencies, we have to treat these investments the way that normal equities are treated. And this is what CoinBoost is aiming to do with the Alliance. So just some stats here. These were last year's stats, 5.62 billion raised, 400 plus projects, and we talked about that average earlier. So what is the opportunity? Approximately 500 million was spent last year on promoting ICOs. Excuse me, still struggling with my Moscow cold. And the 250 billion is now, of course, 400 billion. Nevertheless, I've, have heard some very interesting stories, having been in this field since last summer, including companies that spent large amounts of money, let's say in the six-figure range, which were then sent to media, digital, promotional people, who then came back to them and said, if you don't send us another 100K, we're going to write on all the ICO chat boards and rooms that you had a failed ICO. And unfortunately, this is the kind of thing that happens in a totally unregulated market, is the companies are losing out and the investors are losing out. This is just an example of some of the people that are currently in the Alliance. It includes, of course, 2 law firms, a fund, Crypto IQ, that's Charlie Shrem's group. Charlie Shrem, of course, is the famous Banking on Bitcoin pioneer, and K2 as an ad agency. What is the solution? We believe, just like in the investment banking world, that if you're going to raise money, you should be able to allocate at least 20% of it for ongoing promotion. And that is as important in the crypto world as it was in the equity markets, because it's the only way to ensure that your coin continues to trade and has liquidity for investors. How does it work? Essentially, if you're a crypto investor and you want to invest $100,000 in a new currency, you would allocate 20% of that or 10% of it to promotion by investing with our coin, CoinBoost, which the company could only use to promote themselves. And I will let you talk about the tokenomics.
Thank you. So with those, when a company gets funding and magically, you know, some Ethereum pops up on their iPhone or whatever, that is pretty damn liquid, as you guys know. And in many cases, that money can just be gone, spent as the founders wish. This, our coin, as part of that $100,000 investment that Andrea just spoke of, somebody might have 20,000 in CoinBoost, say, here's 20,000 in these coins, along with 80,000 in Ethereum or Ripple or whatever else they're using to fund. Most people, as you know, are using crypto to fund these various ICOs or token generation events. And with ours, rather than just cashing it out, that firm, through a smart contract, can only use it for those promotional services that we already had up on the board. So in other words, the buyer of that coin that company A, or in this case, an example, Priatech, is using, they get $80,000 in Ethereum, they get $20,000 in CoinBoost. CoinBoost can only be used to promote that particular business, in this case, Priatech. And that gives the investor some comfort level that they're going to get the token talked about. The token hopefully gets a little endorsement from others as well. And that's one of the things behind Andrea's vision for making sure that these guys really do get investor relations and support, marketing support and so forth for these coins. So we do those road shows. So far we've helped, I think, 70 firms do road shows and or forums. The road shows, when they're out there doing that, that's literally they're sitting down for a lunch, and the presenter after the lunch basically gets 15 minutes of these people's time, and if he or she makes a good pitch, they're going to see some Ethereum and so forth popping into their bank account. Here's some of the folks that we've been on the road with. That one picture of me with the beret, that's Charlie Shrem with the glasses, Charlie's wife, and that's Oleg Fier. He is on our board. He's also the ambassador to the Russian Federation from Grenada, as well as the head of Net Element, the CEO of Net Element. And there's, of course, Andrea and Charlie and several others. So far, we've helped raise about $150 million since September. And at that point, it was 60 road shows now and so forth. Now it's, I think, 70 interviews and road shows since September, about 27 or 30. And let me see, boom, boom, here we go. The various things that we offer, of course, can be paid for using the token, so that when a company is funded, they can go out on the road for the rest of the funding they're seeking using that token to pay for it. They don't have to use that, but they can use that token for that. That's the purpose of the token. They can also augment it with Ether or just dollars and so forth. And we'll be doing this in 2 weeks in Monaco, just after the Vintage Grand Prix, we will be this Thursday and Friday, the 18th and 19th, I'm sorry, 17th and 18th of May
17th and 18th.
in Monaco, just ahead of the next Grand Prix, the real one.
Yeah, and that actually is going to be our 10th forum in Monaco, and our 4th forum dealing only with blockchain. And I think it's interesting that Monaco sort of came around to the idea as well, because the days preceding, the 2 days prior to our conference, Monaco is hosting its first blockchain forum that's sponsored by the government. So it's nice to see that they've embraced it.
I would suspect that, like Gibraltar and some of these others, that they're probably going to be a domicile for a number of ICOs going forward. I'm sure they see the potential.
They've lost banking secrecy as well as of last year. It was one of the last places in Europe that still had it. So crypto fits right into that model.
Can I answer questions for anybody? That's the team that we have for the CoinBoost team. And that's our timeline. As you can see, we're in the basically pre-ICO phase right now. But can I answer a question for anybody? I see you standing up, Jay, but maybe you're not answering.
No, I'm more than willing to run a mic.
All right. Yes, sir. Oh, thank you. I'll share this one with you.
Thanks for meeting you.
Thank you.
I've watched you on TV so many times. I like the way you present on CNBC. I'm one of your fans you don't know yet. Is there anything that you have turned down that you wish you hadn't at this point?
Anything that we turned down, did you say?
Yeah, that you wish you hadn't?
Oh, as far as investments in ICOs and things like that?
Yeah, and other stuff like that. Yes.
I have lots of regrets. I regret not selling Bitcoin at 19,000. I also regret even more so not holding on to it when I first bought it at 300. I traded it because unfortunately that's what I am, a trader. So I bought it, went back and forth with it, this is years ago of course, and traded it. So if I could do something over again, I would have held on to it. And if I would have, I probably wouldn't be here right now. Or I'd be out there checking out at my horses.
Anyone else? Here's your chance. Otherwise, I think, what do you run an hour? A couple thousand. So take a chance to ask a question. We've got a lot of expertise here.
Hi, thank you. I'm interested in when you said about the branding or the media side to give exposure or for promoting the new ICOs or to increase the token value after you said the trade or as it goes out. What do you think are the biggest hurdles for that as say like a media, working with your media organizations as far as hurdles to keep that exposure
Sure.
going?
And I'll let Andrea take a stab too, but I'd say up until now, sir, there haven't been venues to get the message out there. We have already had a proposal with the NASDAQ for us to do a show with them, a show that would be, they don't have their own television network, but it would be a production that would be at the NASDAQ and that we would help get the word out about ICOs and so forth, regulation, as well as what's going on broadly in blockchain. We have that same proposal with CNBC. And so I'm very optimistic that we will be within the next 2 months on CNBC with a show on blockchain, on cryptos, and on ICOs. And I think that will be a great opportunity, even if CNBC or the NASDAQ elected not to let us do paid interviews like we've done up until this point. But there will be a lot of commercial opportunities in that show. And right now, there's really nothing else. There's a Bitcoin magazine that got distributed at the Florida event, for instance, that Andrew Prell and we were at, but it's a one-time printing. In other words, there's not a regular production run of anything except online stuff. So I think getting in the real media, as you saw on that one slide, there are 1,602 cryptocurrencies out there right now. Most of them have to pay to be listed on the 500 plus exchanges, as well as the 500 plus exchanges are going to be advertising like crazy too. Because yeah, you've got Genesis and Kraken and BitMEX and Coinbase and all the rest, but the other 495 exchanges need to advertise. Where are they going to do it? Buy a little tiny ad in the Wall Street Journal for 20 grand? Or are they going to come on a show like ours and have a 1-minute commercial about why their exchange is offering, why LedgerX is offering a better solution than GDAX, for instance. So I think having a venue for the ads is what they need.
And I'm also a big believer that early stage companies draw real investors by really presenting their management team. And the early days of Bitcoin and cryptos did not offer that. Most of these investments happened online. Nobody knew who the management team was or if they existed. You would get a cute message pop up in your Telegram box and people would send them money. I think the market has matured beyond that. That still happens to a very small extent, but people want to know who the management team is. They want to meet them, and that only happens through events like this, through forums, through road shows, and of course media. So that step is really the next step to making this a credible market.
Thank you very much.
Thank you, guys.
Thank you.
Thank you.